Hustle Report with Jason Malone, presented by Clicks Media.
Now here's your host.
Now I want to talk today about cash flow management. Now, as entrepreneurs, when we first get started and the money starts coming in, we start to light up. We start to get excited, right? We have more money. We have more at our disposal, right? Wrong. The company's money is not your money. There is a difference, and you need to make sure that you get in the habit of separating the two. Now, whatever your allocation is to yourself, that's for you to figure out and budget based on your individual circumstance. However, you need to have a predetermined budget on how you're going to split funds that are coming into the business. 90% to the business, 10% to you, right? You need to make sure that you have an understanding of what that clear line is going to be so that you do not find yourself in the habit of touching the funds of the business, using that for personal expenditures and taking away from the profit from your business that you should be using to reinvest into your growth. By being disciplined early on, you will prevent yourself from getting into any pitfalls that could prohibit the growth of your business because you're not being smart about how you're allocating funds to yourself and you're touching the company's funds as if they're own. Well, if you were to have a job, you couldn't just reach into the company's bank account and spend it on your lunch. You need to think about it the same way when you're an entrepreneur with your business. And this practice, this discipline will help you in the future and it will allow for your business to grow. And it just makes things a lot cleaner, right? From your taxes and everything that you do in terms of keeping up with your paperwork, because you have to make sure that is tight. And it'll just help you with regards to scaling and bookkeeping, and it'll just keep you out of a lot of trouble with regards to the IRS. Now, I suggest that you have multiple bank accounts set up. You need to have one that is specific to your business. This is the account where you receive your inflows or you make your deposits. Then you need to have set up a second account, and this is your cash account or your savings account for your business. So you have your spending account, the account that receives the deposits, and then you take a portion of that, whatever you've budgeted for, and you move that to your savings account. After your savings account, you need to have your payroll account. This is the account that you move funds into that you have designated to send funds for your payroll and other payments that you have. That way that you can appropriately budget. You're not finding yourself in a situation where you're essentially double counting your funds. Then beyond that, you want to have your own checking account where you receive funds for your business, right? So this is like your direct deposit. You want to treat yourself as an employee of your business on the payroll side, just so your business can get all the benefits and the essential write-offs that are necessary when you have your payroll set up, right? Because depending on where you are, the state has certain requirements as it relates to how you track those employees and how you pay them out on a biweekly, weekly, or monthly basis. Then you want to have basically a savings account. Now, for me, it's not a traditional savings account. This is actually an investment account, but you're using this to pay into on a weekly, biweekly, or monthly basis so that you're putting away funds that you can use for other things in the future, whether you're just continuing to save, you're building your nest egg, or you want to buy a house. This is something that's separate from the money that is going into your traditional checking account. Now we'll talk about other aspects of financial planning that are more tailored towards your longer term saving, your long term financial planning. Things like life insurance, your 401k, setting up your IRA, things like that. But these accounts are separate from that. This is the money that you're using so that you can be liquid and you can make moves whenever an opportunity presents itself to you. Now, going back to the point of making sure you're not treating the company's money as your own money, It's very important to practice this financial prudence and putting fail stops in place to keep you kind of on the straight and narrow with your own company. So you want to make sure that you're using tools like QuickBooks to help you keep track of every single dollar that's being spent, and you're making a good account of how money is flowing in and out of your business. And then you also want to, if you can, bring on a bookkeeper that's going to review your QuickBooks and to just keep you and hold you accountable in how you're spending the money for not only the business, but also how that money is flowing back to you. These are best practices that will just keep you from having tons of headaches at the end of the year when you're filing your taxes. You will have made sure that you've kept track of everything. The money is flowing in the direction that it should flow, and that if there were any red flags, you had a bookkeeper to kind of look over your shoulder to keep you on track so that you don't have any issues. We want the government to stay off our back. No IRS, no issues. If you make sure that you're putting these practices in place, it'll not only benefit your company, it'll just make things a lot easier for you in terms of your tax management strategies as well. The other point to note is that if your company has multiple streams of income or different business lines where how the money flows and it's, the business units operate separately from each other, you should probably have different checking accounts for the inflows and outflows of those businesses. You don't want all of your different streams flowing and coming in and coming out of the same account, because then it becomes hard to track and it just leads to a mess in terms of making sure money is going in the right direction. So if you have one business line where you're consulting and then you have another business line where you have e-commerce coming in, just make sure that those monies are tracking through into separate checking accounts to make it easier for yourself, your bookkeeper, and the tax people to keep track of how everything is going. Now, I'm not a tax advisor. I'm not a financial advisor. I'm just sharing best practices that have helped me from mistakes that I have made in the past, that I have since started to put these best practices in place and can totally see a complete difference in how my business is operating and just providing more clarity as it relates to financial planning and bookkeeping and accounting. As you go about planning your days and the different tasks that you have throughout the day, also plan financially what you have to spend for that day. Plan what you have to spend for the week and for the month. Keeping acute track of these types of activities will just make it so much easier for you, and you'll start to notice that your business will start to have a lot more cash, because that we don't pay attention to tends to just slip away. But if you're watching it and you're keeping track of everything and you're counting everything, then it's easier for you to build upon that, as opposed to just letting your money dwindle away because you're not watching it. All right, guys, this episode was brought to you by Clicks Media, where they're focused on giving you the tools and information that you need to help you start and scale your online business. All right, guys, thanks for tuning in, and we'll see you on the next episode.